Hey there, traders and investors. Todd here. Welcome to the Wednesday live stream. Sorry for being our typical 10 minutes late. Pretty early for us. We're getting it though. Streaming to, should be 4 channels right now. 2 YouTube channels, 1 Twitter, and 1 Facebook. That is the plan. Hope you guys are well. Wednesday morning, the 8th. After pretty busy couple weeks. Another pretty good data piece coming out of Chair Powell. That disinflationary process is happening, and there is continued belief inflation is easing, and we're starting to see some end game in terms of when our rates going to start moving up here. So good move up. Some fireworks after the Fed yesterday. We have some positions going on. We have some more exposure we'd like to put into the market. We're going to show you a couple, obviously, stock indexes to show you where we are on the wave count. Show you some rotation that's happening, where the money's flowing. Rates are going to continue to be a big part of this. I want to show you some things that I've been posting on where interest rates are, and then looking at some yield curves, nominal curve versus real curve, where real interest rates are, and that is having impact as to where markets are going. We're continuing to see a lot of strength in lower capitalization stocks. It's not big, large cap tech that's driving everything like it was the last 4 or 5 years. We have a lot of small and medium capitalization, specifically in growth, showing a lot of strength. There's a lot of opportunities in there. So we've been busy. So let's bring in the TA team, get us started. Good morning, guys. Alex, Terry, how's it going?
Good.
Hey, boys. Good morning.
Opening comments. What do you think, boys?
Yeah, I thought it was interesting yesterday what a reversal the market made. And again, I didn't listen exactly. I heard the summary of Powell's commentary, and the point is, we got that really big NFP number on Friday.
Yep.
And it kind of, is the market ready for good news to be good news, or is good news still bad news? And I think that's what they're toying with. We see the disinflation, we see the reduced inflation coming down. The question is, does the Fed really want to hammer the labor market?
Yeah. Labor continues to be so strong. There's so much good news. Is it bad news? And it's interesting. I mean, Goldman came out and they said they reduced the chance, according to their expectation of recession, down to 25%. They're saying that's significantly less than the street. The street is looking at 63% chance of recession next year. And the more strong data we have, like non-farm payroll, 500 and whatever, 18,000 on 180 expectation, interest rates rocked up across the curve. Markets kind of gave a little bit of a pause. But then if we're not really in recession, at what point will the Fed start to give us more clarity when rates are going to stop going up? And I think it's not the absolute level of interest rates that matters to the economy. It's the uncertain future direction. And as a macro guy, Alex, you know that. It's the uncertainty and the quick pace, the quick rate of change in interest rates that moves and disrupts balance projections and budgets on an individual corporate level as well as on the public side. It's uncertainty of where rates go that influences markets.
Yeah, definitely. But let's see CPI next week. So
Yep.
CPI is one of the key measures of this disinflation, because as we see CPI drops over month to month, Fed is actually changing the narrative. So in order CPI to drop further, we need to see some of the components in this CPI, of course, moving lower. That includes pretty much energy and some other stuff going down. And we have been kind of a sideways in these things. So I will not be surprised if the CPI doesn't go that much lower. So around 5.9, I think it will be enough for markets to actually still look for this inflation environment, and actually Fed kind of can slows down and plateau around 5% or 4.75. So I think we are not in the environment where we can see further increases that much. So the question now begins 6 months forward. Are we going to see 5 as a plateau or 5.25? Up to latest NFP, 5 was the plateau. So now we are gravitating in a small percentage towards 5.25, as you can see on the Fed CME tool. So I think CPI will be the main component we're going to see next week, where actually it's going to be next couple of months forward. And my kind of projection is that we're still going to see that moving lower. But then, as you know, our XLE chart shows that in one moment this triangle is going to be over.
All right, well, hold on. You're jumping ahead. You're jumping ahead. Let's bring it back. Let's bring it back. So, guys, bottom line, what's going on here? We need clarity as to where, when inflation will start to drop. And inflation is being driven on the services side. It's being driven on the wages and the strong labor market. We need some clarity there. And while the market doesn't have clarity when the Fed, because Powell on several occasions, the last 2 meetings was beating us over the head saying, higher for longer, get used to it. And then all of a sudden, he came in with a different tone in the last meeting and had mentioned disinflation 13 times and reiterated that. So are we finally getting some clarity at 5.25? And can we start to see some stabilization? The big point, the stronger the data that comes out, the stronger the US dollar goes, because we saw, let's start at the top right here. Usually we start with the stock indexes, but we broke down here on the 10-year yield through 3.3. We almost got through 3.3. And we've been looking at several different patterns on this 10-year yield. And what happened is as yields were dropping, dollar was dropping, which is good. But then all of a sudden we got a strong NFP, 4.5, 4 times whatever. Actually, it was probably 3 times. The reading on jobs, rates moved up, dollar moved up, the stock market paused. So we need some clarity on there. And of course, my TD Ameritrade just disconnected as I'm on live. Hopefully I can pull SPX in there. So as long as that dollar keeps rallying, that's problematic. And I know Alex is kind of looking at a low in the dollar for now. It's going to impact emerging markets, going to impact the international. It's going to impact, obviously, interest rate sensitive sectors that have a tie on the dollar. So error loading. Ooh, that's not good. I just get booted out of my charting as we're in here. Let me see if I can reconnect quick. Looks like TD Ameritrade didn't like what I was saying on interest rates.
Were they censoring you?
I guess. Yeah. You guys, if you guys are connected, you might need to jump in here as I just get kicked off of charting. That's awesome.
Yeah.
Yeah, why don't you guys, who wants to take it? I'm going to try to reload this, and I'll jump back into the indexes for you guys.
Well, throw it back to me here, and I'll run through my little sector spiel.
Okay. You are now... You're going to be up here in 10 seconds. Okay, full screen. And Terry, you are live, sir.
All right. While Todd gets his situation organized there, we love technology. It's a great thing, except when it isn't. I've been through that myself several times. Hello, traders and investors. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. So, last Wednesday, obviously, as expected, the Fed hiked interest rates another 25 basis points, even on the heels of lower than expected earnings. You forget about those earnings season. We're more than halfway through that now. Mega cap growth stocks, Apple, Google, and Amazon reported last Thursday. Besides, it was really impressive to see Apple pushing higher even after the underperformance noted in that earnings report. They ended up S&P ended the week up 1.62%, 3.34% for the tech-heavy NDX Friday. It was mostly a consolidation day. Markets gave back and corrected a little bit of the big rally because Monday through Thursday was a pretty good push. But it was interesting. I noted Apple remained higher, 2.5% on Monday. Now, for the month of January, S&P overall netted a 6.17% gain, which overwrote the December losses, and the NDX rallied 10.62%, which also exceeded and reversed all of December losses. That's a very positive thing. In fact, we've got 5 weeks in a row here of positive movement in the NDX and the markets. Now, in sector performance last week, it was led by the growth sectors, namely the communication sector, which was up 5.26%, the technology sector up 3.71%, and cap-weighted consumer discretionary was up 2.34%. Energy bit the bullet last week with a 5.78% decline, and utilities and healthcare were also in the red. Now, this week, markets did a little bit more consolidation on Monday and a little bit of Tuesday morning until yesterday, sometime following, I guess, the digestion of the Fed commentary. Markets made another move back to the upside. And in 2 days of trading now, the S&P is up another 0.67%, while the tech-heavy index is up 1.23%. Now, both indexes, I'll note, are holding above their 200-day simple moving average. That's this red line here. That's the 200-day moving average. The blue line is a 50. And matter of fact, when the 50 crosses above the 200, that's now a golden cross formation we have in the S&P. We have yet to achieve that milestone marker in the NDX, but we do have a rising 50-day trend here. So positive there. I will note this morning that the energy sector is clawing back some of last week's precipitous losses. Energy sector is up 2.8% in 2 days plus pre-market trading, while technology remains with gains here, anywhere from 1.2 to 1.4%. It's doing a little bit of updating in the background there. All right, let's move on to our sector leader scoreboard. Now, I want you to take a note of these yellow weakening vectors have now formed from this continued underperformance here in energy, healthcare, and staple sectors. And we also continue to see the other value sectors, industrials, materials, and financials, with southerly headings. And pretty much materials was the last to exit the leading quadrant. We currently have no sectors sitting in the leading quadrant on our weekly RRG. All the value sectors have now pushed down here into the weakening, and is setting the stage for the new leadership to be coming now, I believe, here from the communication sector, the technology sector, and possibly the real estate sector, although there's a little bit of hesitation in the move here. But we really just had a rocket ship here with communications last week, with Meta making a 24% gain on really positive earnings and forward guidance. And we've even got an acceleration move here now in technology. So both of those with rising blue improving trend vectors, we're starting to see that push in technology. And if you've been following us, we've been hyping semiconductors is mostly the first out of the gate. There are other stocks starting to see some movement inside that tech sector, and we're going to take a deeper dive in that, I believe, with our clients today in our members webinar. That's software companies are starting to peak and come back around there. Now, we still have a rising momentum in the cap-weighted consumer discretionary. Both Amazon and Tesla, the big heavyweights there, really drug that cap-weighted discretionary sector down here into the lagging quadrant, but both of those are now pushed back up. We are seeing reemergence of consumer discretionary back here into the improving quadrant. All right, Todd, you ready to carry on with that? I'll leave it there.
I am. I made up with TD Ameritrade. I called their helpline and apologized for talking about higher interest rates and maybe more problems in the economy. Yeah, we're good. No, and that's a good point. I actually want to keep going on that, Terry. And that's been the big kind of theme that we're seeing. And we're doing this webinar all backwards today, which is fine. Just kind of going with technology, but. You know, we started with interest rates, now we're looking at sector rotation, and as I mentioned at the beginning, you know, there's been a pretty good rotation happening in stocks below the surface. So looking here, we're going to do a little bit more on the relative rotation, what Terry was saying with consumer discretionary, technology, communications, and just in the last 2 days, we've seen some of the large cap growth in those three aforementioned sectors move up, but there's been a good rotation below the surface. You're talking, you know, 50 billion or less in terms of market capitalization. We're seeing a lot of 5, 10, 15, 20, 30 billion dollar market capitalization companies rotating in. They're more fairly valued, and they have better technical setups. So this is the monthly rotation on the left, weekly on the right. And there's a lot here, but the main themes I want you to focus on are going to be the three guys over here in the bottom left, which is in the lagging quadrant. This is 3 ETFs that have been underperforming the benchmark S&P in the life of these lines, which right now go back to September of last year. We could stretch them out a little bit. You know, they've been falling since pretty much the second half of 22, and then as soon as we came in to the new year, what took a hard turn up to the right? It's going to be small cap growth, which just moved from lagging to improving. It's mid cap growth, which is right on that divide, and then large cap 500 growth is not quite as strong as the mid cap and small cap, but it is heading in the right direction. At the same time, their three counterparts are doing the exact same thing. Russell 2000 small cap value, which, you know, that's kind of, it's kind of hard to envision a small cap, low capitalization company that is value, but you know what I'm saying. Falling out of favor there from the weakening, heading into the lagging. Mid cap value, same deal, heading to the bottom left, and large cap value doing the same thing. So the rotation is happening here, and there's a lot of opportunities that we're focusing on with clients and these guys right here. We'll give you a couple of them. This is going to be the weekly, so more sensitive move. You can see just in the last couple weeks, this guy is only going back to halfway into December. We've actually gotten a little bit of a move in large cap growth up towards improving. This is small cap growth, and then mid cap is over here, making a hook over in the weakening. The further to the right, the more relative strength there is to the benchmark. So you're getting hooks in mid cap, small cap, and large cap. Okay, now even more to the point, even the small cap value is also doing a hook. Okay, it's interesting. Small cap value is doing well, where mid cap value and large cap value are falling out of favor. So it's really a market in here of small and medium capitalization. So, you know, I think the way you look at this is, and the way we trade and the way we approach markets is, we always want to know where the index is. We want to have an idea what the index is doing, the S&P, the NASDAQ, and specifically the RUT as well. We want to make sure that we're not getting, you know, kind of trading ourselves into a wall of resistance. We just want to make sure the S&P being such a cap-weighted index, we just want to make sure there's room for it to move higher. And I'll show you where we are technically on this market. And I think that will show we did break some very significant resistance. 4,100 was just a massive level here. Actually back in September, again in early December, mid-December. We even tried it a next time on January 27th, broke above on the last non-farm payroll and Fed talk. We came back and retested it. And the way we're looking at this is still that we are in a motive impulsive move higher. 43.25 really doesn't seem to be, that's really the next resistance level. So we have 150, 60 S&P points until we are coming up into resistance. And again, this is a conversation that I think we should have, and this is one that we are talking with our clients. Like, you want to be where it's easiest to make money. You want to swim in a stream where it's flowing in the direction you'd expect. It's not too rocky, not too many cross currents or waves or rapids or whatever. You want to be in a smooth stream and just kind of ride to where you want to go in the destination. And I feel like if you're always trading the indexes, and I know it's sexy trading the S&P futures or trading the SPX options, it's great. But there's a lot of stocks that don't respond as much on the downside when the index does get slammed, like yesterday's massive move. Like, Fed came out, Powell said disinflation, boom, slammed back down, then had to rally all the way back into the close. The point that I'm making here is there's so many, as I said, sub $50 billion market capitalization companies that are not experiencing this volatility, are not participating on the downside, but are participating in the upside. And that's what swimming downstream in a nice kind of directional, low turbulence sort of market vehicle does for you. So don't always bang your head against the wall with the indexes, because by nature, they're very choppy, back and forth. That's just what they are. So do we have any near-term resistance? No, not until I think 43.25. So this is a half-day chart. This is the daily. We are still showing. Oh, sorry. Thank you very much.
There you go.
So we don't have any resistance until thanks, Terry. No resistance until 43.25, which is going to be those old August highs. We are still looking at a three-wave move potentially coming from the 2022 decline. You can make the case that that's a motive off of one, pull back in two. We just came back, retested 4,100, and don't see any reason we can't get to 43.25 and the 100% projection of this October to December move. Now, what I think is awesome, and we went through this fun discovery with the members this week, your typical wave three, right? In a textbook motive wave pattern, your typical wave three goes at least as far as the percent distance traveled in one. So my little model here would be 49.83. The typical wave three does a 0.618 multiple of percent distance traveled in one. And I guess I've been doing it so many years, I drop wave three right at the 1.618 on my little model here.
You got a calibrated eye, Todd.
Yeah, man, it's just muscle memory. We all have it at this point. The thing that I'm bringing up, which I went through this realization on a member video, and I took about 2 minutes cracking up and shaking my head on this one, is the 1.618 multiple of the October to December move. Look where it is. New highs, 48.82. Wouldn't that just blow some people's heads right up? Like, that's awesome. So I'm not making a prediction that we go to new highs, but the 1.618 multiple of this move is at new highs. So I'm very much interested to see if we can get up into this zone. Now, I'm going to show you one more, okay? If we fail, and I'm very much aware of the risks out there, everything we talked about with the move we're seeing in rates, dollar strength, earnings have not been great, but everyone's giving a pass. Everyone's guiding lower for next quarter because it doesn't matter. Everyone's guiding. Everyone's citing macro, FX, supply chain, a reduced consumer. Everyone's getting a pass in here, so why not kind of guide as low as you can, set the bar low and beat expectations. But I am aware that there are risks out there. So the alternate that I'll bring up here is going to be this. So it's still 5 waves down. And instead of saying that this B, okay, is going to be right here in August and this is C, B is being stretched out. B is being stretched out. And if I'm wrong, if we fail here, which let me just do a quick retracement. If we fail, actually we got through the 786. Look at that. That's interesting. If we fail below the A wave high, 43.25, if for some reason we can't get through it, I think it's very possible we are going into a triangle And that would ultimately be the B wave, the second corrective wave off of the 2022 high, and we're going to have another 5-wave move down into the lower 3,000s. So I'm prepared either way. I have my suspicion that we are moving higher. I think the market is very, very under position. As you're saying, we're seeing some really, really good support levels and some good action in small, medium cap growth. And now, just recently, as Terry said, in the Fed day, what was it, yesterday? Was it yesterday, Terry, where Apple, Microsoft, Nvidia were just up? They're both up 1.5. They're all up 1.5%, 2%, and the whole market's kind of languishing going into the Fed. And everyone's like, "Wait a minute, growth is up today," and then we got the Fed reaction.
Yeah, it's definitely interesting. I agree with all of that. And the thing is, the market also, the other point I wanted to make on that is that downtrend line. We are running well above that downtrend line and the 200-day moving average. And then we have that opportunity in the S&P. Even if we do get a little modest pullback right now, I just consider that a normal consolidation move.
Yep.
There's a good zone of support right there for us to make even another bounce. So even in your smaller time frame, you've already shown us breaching that one line. But we have even on the larger time frame, we still have support. So I definitely have a much higher probability they think that we're going to continue with the bullish move.
Yeah, I agree with you. Yeah, let me just poke the NASDAQ here quick. And then, Alex, get ready, man. We're bringing the Serbian James Bond in.
Yeah, Alex, do you want to share your screen and Zoom and get that ready?
Yeah. So, yeah, same deal in the NASDAQ. And, let's talk about this, too. I think somebody on YouTube yesterday or a couple days ago mentioned that the diagonal in the S&P is not exactly accurate. I do want to address that. It was a good point. But we'll get back to that one. So same thing. Here's the NASDAQ, little wave 1 move up, big old deep wave 2. We broke above the 12,100, which are those November, December highs. We broke through the 200-day. We broke through the downtrend line, which was more sharply angled to the downside because the NASDAQ fell harder than the S&P in 2022. Or maybe I have to make Alex presenter. I will, Terry. Yeah, let me do that right now here. Alex, you are going to be good to go, right? Alex. Maybe not. Okay, there you go. You're good. Okay, so yeah, NASDAQ's good to go on the upside. We came back, held some support. Let me get down to a little smaller time frame here. I'll give you just a taste of what we're looking at here. So the move heading into the Fed was, we think, a pullback in 4, and it lasted a couple days. It started here on February 3rd, 4th, did sort of a double bottom here into the Fed, and then if you look at the 5-minute chart, we retested it again. And markets are sort of flattish heading into today, but it looks like we're heading into a 5 of 4 pullback again, and then we're going into this 3-4 business of higher degrees, okay, of higher and higher degrees. So support has been held. I think the market is speaking clearly. And then the last thing that I just did mention that I want to say, on the diagonal side, it works in the NASDAQ. So let's talk about diagonals real quick. This is not the case in the NASDAQ, but what it is in the S&P, it takes the shape of a diagonal. And in a traditional contracting diagonal, wave 1 should be the longest, 3 should be the middle, and 5 should be the shortest. This is not exactly the case. And the problem is, the original RN, Ralph Nelson Elliott, and the immediate the predecessors and the people that worked with him, they didn't assign these very specific rules and requirements to the diagonals. It's a 5-wave move of a contracting, decreasing volatility nature. So it wasn't until later years of Elliott, people who have taken the work and carried it into the next century, that assigned very specific rules. So when people come in and say, well, it's not right because 3 isn't the shortest, it's a 5-wave move. It is. You have down, up, down, up, down. It's 5. Okay, and then what we do from here is that's what we're really trying to figure and gauge where we're located within the wave count. Was the correction over here and we're ready to start a new 5-wave move? And again, on the NASDAQ, you don't have that issue because it's just a 5-wave move down. There is no overlap. So you have 5 and 1, up and 2, 5 and 3, up and 4, no overlap between 4 and 2, and then down in 5. So it's weird. It's a non-overlapping sort of contracting volatility pattern. Motive waves 1, 3, and 5. And I think 3 was a little longer. Yep, 3 was a little longer than 1. But it's like, it's not so much the depth of 3 and 1 is the issue. It's the duration. 1 was the longest. 3 is the middle duration, and 5 was the shortest. So it was almost a contracting diagonal along the x-axis, not the y-axis. It was a diagonal in time. So just wanted to talk about that. Food for thought. Curious what you guys think about that. Alex, I'm going to turn it over to you when you are ready, sir. You're up. Oh, sorry, Alex.
Muted there. Hang on a second.
Yep, you're good. Go ahead, bud.
Okay, so let's review what's going on the CME tool. So the 22nd March meeting, obviously CPI next week will influence that. We are currently at 93.7%. We go up 25 basis points, 475 to 5%, and 6.3%. We're gonna go 5 to 525. So obviously CPI next week will greatly change, or if it's in line with expectation, it's not going to change much. This one will drop if CPI falls, and this one will go further higher towards almost guaranteed, although nothing is guaranteed, like 25 basis points. We think that if CPI goes lower, Fed might pretty much plateau here for at least a month or two or a couple of months. So how do we see? Todd already showed you the 10-year yield. So let's look what the dollar is doing. So dollar has retraced a first portion of the overall ABC move up. We were looking for dollar to start correcting on the upside after a 5-wave move. So if we drill down to a smaller time frame, you will see we are looking for 5 waves up in a wave A, down in B, and up in C. I expect this to be completed in the next couple of weeks, and then as we see the wave structure after a 5-wave move down, when you don't have a flat before, obviously you're going to see a measured move at least, so dollar lower. So we are keeping track, and this is basically aligns a little bit with this week and next week CPI coming, that we're gonna see some type of a sideway, maybe just a slightly lower price action, and then once the dollar starts to move lower, EM markets, other risk-on currencies, and also stocks might be heading higher. So oil is pretty quiet, just a 3-way move up, still in this channel. This is a ABC, XABC, some type of a complex correction. We are still looking a move down to, this is Brent 64, around 70 on VTI overall. So not much of a change there, just a sideways consolidation. And also if we look commodities, the Thomson Reuters index, it's still pretty sideways. So I do expect this to kind of still stays in the sideways consolidation with before it starts to move lower, which will actually give us a pause in rates after the 5-wave move up is done. So what we can see here, we might get just a slight pause, and then we might see a continuation of a weaker dollar, move up in risk-on assets, and that will be the themes that we are going to explore this next couple of weeks on the macro subject. Gold is moving lower. It's in the pullback. Let me just show you the gold chart here. So After the lows, we look this as some type of an ABC pullback when it's kind of agrees with the dollar. So purely move up in gold was the dollar move, as you can see. And also silver is doing the same with the truncation, some type of five-wave move on the upside and in some type of a pullback. Also agreeing this was a dollar move on the upside. Let me just touch briefly on a Bitcoin. Bitcoin is still in a fourth wave consolidation. We have tomorrow a crypto lab as well. So I'm going to just touch because of the overall situation in the Bitcoin. Still looks pretty bullish for one more move up. So clearly we are seeing verticality here. A very nice impulse in a third wave. This is a flat or a triangle. After a first wave or a wave on the upside and a small pullback, we're gonna expect a risk on to continue. So overall, these themes kind of align from all angles on the possible further continuation after a small pause on the risk on front. Yeah, so that's it from me, guys. Unless you want me to show something else more.
Nope, we're good. We're good. Yeah, we'll leave you with one stock that we're looking at. Alex, why don't you pull up Uber while you're at it? Uber
Sure.
is we're watching, kind of talking along those growth stocks within technology that have been coming in, and Uber came up on a scan of ours, and they came out with earnings this morning, and I just wanted to get an update on the opening price, Alex.
Yeah, really nice. Let me just go on a 3-hour chart.
Yeah, Uber
So,
actually made money. They made 21 cents a share rather than the consensus estimate was a loss of 21 cents a share.
Wow.
So that's a huge difference, you know, turning back to green from the red. So
Hey, good job. So revenues I'm just showing this from CNBC. Revenues 8.6 billion versus 8.49 expected. 29-cent gain versus 18-cent loss. Holy cow. Strongest quarter ever, capping off the strongest year, said the pandemic's impact, blah, 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 blah. Just looking for like one time. How did they save so much money? Gross bookings. Just looking for margins. That's impressive. Delivery. Gross bookings were the same. I got to look into that data. So go ahead, Alex. Show us what. I have this on the buy list. I was going to add it to the portfolio, but oh man, I might have to wait for a pullback now.
yeah, we just talked before this news, if you remember, pre-show that we liked Uber,
Yep.
the wave count, and then the earnings hit, which moved the stock further higher. But it seems we are now at equality, very close. Our next targets will be around 55.43. So it seems that we're going to continue up and we should look for smaller pullbacks potentially to pursue further long. So wave 3 target is around 55.43 from this 37.55 where we are trading currently. So the wave count looks pretty nice from our perspective, and it seems it's gonna continue to fractionally start to move further on the upside with these smaller corrections.
Nice. Gotcha.
Which is going to be our entry points for the further move on the upside.
Got it. Good stuff. Another one that we're tracking that we actually, these are stocks. What we're talking about here, guys, are stocks that we hold in our SSD, stock swing desk. So we maintain an options desk at Trade Analysis, and we maintain a stock desk. So actively traded and managed stock positions, one of which that we hold is Skyworks. And this is another one just coming off of a nice, huge, extended ABC decline from 21 down into the end of from 21 down into 22, coming up off the lows. We're tracking the possibility that it is motive off the lows, which means it's going to be 5, pull back in 2, and now we're starting to get that wave 3 activity. And if you look at the hesitation that occurred leading into the August high. And then yesterday, earnings came out in Skyworks, so we're along this one from 107.5. We just pulled our stops from 98 to break even, 107.5. And the earnings report was interesting. These are notes just from yesterday. I have this off the top of my head. 259 EPS in line, but in the last 4 quarters, Skyworks beat 3 times based on EPS. Yesterday was the first time they didn't beat, came in as expected. Revenues also beat the last 4 straight quarters on Skyworks, and there was a lot of downgrades on this stock because they have so much revenue concentration in Apple. Like 65% of their business is in Apple, and they're worried as Apple is starting to replace, like they did to Intel as they went into their own M1 chips that they're sourcing from Taiwan. Is Apple going to eliminate the radio frequency, which is what this company makes, transmitter within the Apple phone? And they got a couple downgrades. I think the stock was underperforming and starting to get a little visibility that might not be immediately a threat with Skyworks. So they're benefiting from this 5G upgrade cycle. We got like 4 or 5 upgrades: BMO, Wells Fargo, KeyBank, Piper. Targets anywhere from 110, 120, 130 up to 140 on Skyworks. So this one looks good. We're through the 100% of, let's see, where's 100% on this guy? That's going to be right here, 115.11. We're through the 100% of white 1 compared to white 3. The 1.618 is at 137.67. You can see one of our take profits is right there. So Skyworks looking good. Just to show you, it's not all champagne and rose-colored glasses over here at Trading Analysis. Here's another one. This was not fun yesterday in the open. This is another one we hold, AXON, and we had a good entry on it for half with our members. We didn't get the other half. Terry, where were we looking to buy the other half? Was it 160 or I forgot where it was?
On Axon, I don't remember.
Don't remember. It was just below, as we pulled back in. And listen, this is, let's go back and I'll have that conversation in a sec. But we got the good move from 168. We moved up. Then all of a sudden, yesterday on the open, just someone came in on no news and just smashed the stock down.
Did not find any
nothing.
News article at all. I mean, one of our subscribers made a post in our private Discord chat. What happened to Axon? I started looking.
Yeah.
All I could see is the price drop. So got to be some kind of internal thing. Now, the only thing I saw earlier in the month was the state of New York and some kind of action with the concealed carry laws. And Axon is a maker of these taser weapons.
Yeah.
Right. Okay, but there wasn't any news yesterday that drove this price down. But there was something.
That news is
current going on with that.
Yeah, that the concealed carry. There was some news for that, but that came out a month ago here in New York. So I don't know why that would. And I searched Twitter. I searched high and low for news story. I couldn't find anything. I don't know where that volume came from, but I mean, our stop just got missed.
Insider dark print move or something.
Yeah, whatever. That was kind of fun. So we had Skyworks, it was up 10%. Axon was down 10%. I'm like, all right, well, this is fun.
The fun part is it didn't hit our stop loss.
Right.
They didn't sweep us.
It didn't. So I'll run you through 1 or 2 more stocks, give you a little bit more value here, and then we're going to flip over to the member webinar. But NVIDIA just making new highs yet again. Not only is it through the December highs, as the NASDAQ and S&P are, we're dealing with that. We're through the August highs in NVIDIA. Let's take a look at Apple here, 154.12. We're watching him on the blue. Trying to figure out if Apple is doing a wave 3 of 3 move here. This move in Apple is impressive. Tesla pressing up into 198, 200. Let me get down into a little smaller time frame and just, are we going to break from a triangle? Interesting. Uh-oh. Tesla's trying to break. I know our members are going to be banging for us. Google, down today. That's a pretty big move in Google. We got to look at that chart, guys. Google's down 6.13%, and Meta's down 1%. Not doing too too much here. Just
Meta's
kind of
still got a
consolidating.
bull flag sitting up there after that breakout last week.
Yeah. And then Microsoft is, oh man, Microsoft is breaking out.
Yeah, buddy.
Microsoft is breaking out. All right, well, we got to go to work. We got to go to work, boys. All right, good show. As I said, what are the couple key takeaways? Watch those rates. Watch good data as it comes in. Watch what happens to interest rates and the impact on the dollar. There's still an inverse relationship between the dollar and the stock market. The better the data that comes out, the more pressure there is on the Fed to continue to raise rates. As I think Powell said it yesterday, he's happy to see the tightening of monetary policy has not come at the expense of the labor market. So, all right. I mean, we're kind of moving away from this recession narrative, but the problem is if the data gets too good and we move too far away from a recession, Fed's going to have to continue to raise rates, and that eventually, I think, is going to keep equity buyers at bay. So I did a free video on YouTube here entitled, Are You Hoping for a Recession? I think if you're a stock market bull, let's get some lousy data in here. Let's put us in a recession. Put the Fed on a vacation for a little while, raising rates, and then the stock market can rally. So I say bring on the recession. I think it gets muddier and murkier if we continue to have strong data. Again, driving that dollar up. And Alex can have a whole conversation on the other side of the pond, what's going on with the ECB and the Bank of Japan to make that dollar move up. But it is causing some cross currents at home. So watch the macro, watch commodities, currencies, fixed income are all having an impact on the stock market. You got to be a global macro. You got to be aware of the global macro flow in here, I think, in order to trade equities. Closing thoughts, guys?
Yeah, I'm getting excited for this new year. It certainly last year was long and drawn out, an ugly decline in the markets, and it's I think we got a fresh start happening again. So,
Yep.
looking forward to it.
Yep, for sure. And finally, the Fed's in a position where if we really were to face some exogenous shock, we have a little bit of room now for the Fed to react if something were to come down the pike. So I feel like we're better equipped than the Fed coming into a disaster with Fed funds at 50 basis points. So, yeah, looking good. Just got to see how the rest of this earnings season goes, and we'll take it from there. XLK leading the pack here up 0.6, energy up 0.25, materials up 0.18. Everything else is kind of languishing. Utilities are down 1% today. And just looking at the other macro stuff. All right, that's a wrap. Thanks for joining us. Thumbs up there, and check us out at tradeanalysis.com. If not, we'll have to wait all the way until next week. Alex, Terry, good job. Thanks, guys.
Bye, guys.